Hello traders, you're welcome to this video. In this particular video, we are going to be talking about the volumes indicator. We are going to be discussing how to use the volumes indicator to enhance your trading strategy and make smarter market decisions. Now, reading volume charts and understanding how volume interacts with price action is very important, guys. This is the volume indicator. I already added it to the chart. It is very important to know how the volume interacts with price action in order to help you make more informed trading decisions in the Forex market. Now, let us look at how to read the volume indicator. Let us look at how to interpret it. Basically, in Forex, volume refers to the number of currency units traded in a given period. Like we can see, if we hover our mouse over one of those volume lines, you can see that a value came out 571. You can see, click on, just hover it over the bar. You can see that value is going to come out. Just hover it. You can see this one is 219. This is 179. This is 294. This is 321. So it indicates the number of currency units traded in a given period. Now, unlike stock markets, Forex is decentralized, so the volume can vary depending on the broker. However, many brokers provide volume data which can be analyzed to gauge market activity. Now, the volume bars are usually displayed, as we can see, they are displayed at the bottom of your price chart. Let me just quickly remove the indicator and add it up again. Okay, indicator volumes, you can see, just use the default settings. You can see that when you add it up, it usually comes at the bottom of your chart, and you can use this on any time frame of your choice, right? Now, when you add up the volumes indicator to your chart, how do you use this indicator to get good trading opportunities? The first thing you might want to do is to look for or identify the trend. When you identify the trend, for example, this is a bullish trend. When you have identified the trend, you can now look for trends in the volume. For example, an increasing volume. We can see that from here, between here and here, there was an increasing volume. We can see 6549, 6652, 19,000. This is the 1 hour time frame. That's the reason why the values are bigger compared to the 1 minute time frame that we were on before. So you can see that increasing volumes signify a stronger momentum, a stronger bullish momentum. You can see increasing buy volumes. You can see it indicates stronger bullish momentum. You can see that the price of the asset continued buying. It's continued buying. Now, once you have found an increasing volume, it helps you to know that there is a growing interest in the asset. On the other hand, a decreasing volume, for example, we can see that these red lines show a decrease. You can see that it was decreasing gradually, 13,000, 10,000, 8,000, 6,000, 5,000, and you can see that while it was decreasing, the price of the assets was also decreasing. You can see it. You see there was some bearish momentum. Around that point. So the decrease in volume indicates waning interest in the asset. Now, in terms of identifying key patterns, when there is a significant price movement accompanied by high volume, such as what we had here, we can see that there was a significant price movement here. There was high volume here. We can see this was a whopping 29,500 around here. It's possible that it could be an economic event that caused it, or it could just be, one of those days. It could just be one of those days, right? So, but we can see that an increase in volume while price movement is going up, it usually confirms the strength of that bullish move. On the other hand, if we had a bearish move, and we see an increase in volume, that indicates a strong bearish move. Okay, now let us just look at something here. Okay, now you can see that the volume was decreasing. From using these red lines to judge, you can see that the volumes were decreasing. So a decrease in volume for an asset shows stronger bearish momentum. Decrease in volume shows stronger sell momentum, while increase in volume, because this is a bearish trend from here to here. So you can see that at points where we had decreasing volume, there was stronger momentum. You can see, let us check here again. You can see that as the momentum declined, as the volumes declined, 8,000, 3,000, we can see strong momentum. So when you are in a bearish trend and you can see it's decreasing volume, it shows a stronger bearish momentum. But in a bullish trend, when you notice increasing volume, as you can see, it shows a higher bullish momentum. So understanding these patterns is very crucial. Guys. Now, you can also recognize breakouts. For example, when a currency pair breaks through a key support. When a currency pair, in this case, we are using the gold XAU-USD. Now let us just look for an important support level that was breached. We can find that somewhere. Let us use a dynamic support, for example. Okay, this is a dynamic support. So at this point, we can see that the support was broken. It suggests, and right after the support was broken, can you see what happened? Can you see that there was an increase in volume? You see the volume decreased just right after this breakout happened. You can see that the volume started decreasing. See 20,000, 17,000, and like that. So the volume was decreasing and the price of the assets kept on decreasing. Now that decreasing volume can further emphasize the validity of that sell breakout. Now on the other hand, if we had a bullish breakout and you see an increase in volume, it can further emphasize the validity of that bullish breakout. Okay, now you can also combine your volumes indicator with other trading indicators for additional confirmation. You can combine it with other indicators. You can combine your volume analysis with candlestick patterns. You can combine it with, for example, like maybe you find a bullish engulfing, and maybe around the part where you saw a bullish engulfing, there was an increase in volume on the indicator window. Maybe, for example, around here now, maybe there was a bullish candlestick pattern forming, and then you saw an increase just right after this red line. You can see there was an increased volume. So that further emphasizes the validity of that bullish move. So you can use that as an additional confirmation, and you can enter a buy trade, set your stop loss below the support, and you can target the next resistance zone for your exit, right? Now you can also decide to use moving averages. For example, we can just add on maybe 50 period SMA. You can use moving averages to also confirm your signals. For example, as price crossed above the moving average, you can now look at the indicator. You can see there was an increasing volume. You can see it here. There was increased volume right after the price of the asset cut above the moving average. So that was a confirmation of the bullish move, and you can see the price rallied up to this point. Furthermore, you can also use other indicators like the RSI. You can use RSI, you can use the stochastics, any other indicator of your choice, just for additional confirmation, guys. As you can see that right around the oversold level, and as the RSI began to curve upwards, you can see that there was an increase in volume, and right after that happened, you can see that the price of the asset went up. So guys, you can use any indicator of your choice for additional confirmation when using the volumes indicator. So basically, this is how it works. I hope you found this video insightful. Kindly like, subscribe, and turn on your notification bell so that you can get alerted on more videos for more trading insights. Cheers, guys, and happy trading.